This is Don DeBartolo, a senior commodity broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken up into three segments: futures, commodity options, and future spreads. This is Beyond the Spotlight, a video that I produce Mondays to spotlight two or three markets that may become trading opportunities for this week. This week begins with Monday, April 5th, 2021. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Jumping right into the charts, I have two today. The first is the June 2021 Australian dollar contract, and this is a trade recommendation that will be sent out later today as well. So check your inboxes for this trade setup, but I wanted to talk about it in depth on this video since it's landing on the same day. First, I had a channel formation drawn off with these recent highs and these recent highs here, and then these recent lows, and current lows created my channel formation. This market has been range bound since the beginning of this trading year. The only time we broke out is when we traded up above 80, and that was the first time the Australian dollar contract has been at that price level since 2018. But for the most part, we're trading sideways. You can see the 20-day, 50-day, 89-day moving average is all flat within this channel formation. Even the 200-day moving average is rather flat down below. This is my MACD indicator. It's pretty flat as well, though there's starting to be an uptick. And then the stochastic indicator, my momentum indicator, is actually showing an uptick in upside momentum. I liked how the market traded lower below the trend line or the channel formation, but then ended up closing higher, and then there was follow through today's session. So I'm looking for an opportunity to get long this on a break only of this pivot point high here. Let me get that high for you. That is 76.66 from March 30th. So I'm only going long on a break of this high. It's also a break of an 89-day moving average. I'll place my stop loss on the other side of these lows. Not this one down here, since that was a quick sell-off, but the market closed higher. But below these lows back in here, some in here. So I'll put the risk in the trade recommendation, and then the upside target is the top of the channel formation, with just below it. Perhaps the market can even break through there and go test this 80 price level. But the first target will be in this area here around the 78.50 level. Now there's a couple moving averages here that the market really needs to break through to get back to the top of the channel. And hopefully that will come with this uptick in momentum. The US dollar futures contract looks to be selling off at this time, so there should be some follow through on the Australian dollar. So stay tuned for the trade recommendation in the Australian dollar, but here's a deep dive on what I'm seeing and my trading plan going forward. Okay, for the second chart today, this is the June 2021 unleaded gasoline futures contract. And I've drawn off here a very short-term 1, 2, 3 top formation. I really like to see more time in between the 1, the 2, and the 3 points. But you can see the market has just been railing ever since the end of last year. We had our first pullback recently on concerns of potential reclosing of economies over in Europe, potentially here in the United States. And then the market has since rebounded and started to trade higher. Perhaps this number 3 point is a pivot point where we can start to see the market sell off from here. I have a 50% Fibonacci retracement looking for pullback to the 50% level, 163.79. So that'd be quite a bit of ways from where we are. The market would have to break this number 2 point to trigger the 1, 2, 3 top formation. That may not occur this week, but there may be another trade set up on a break of this pivot point low if the market bounces, trades higher, and then turns back around. I'm already showing some downside momentum. My trend is looking to turn over here as well. So there's some signs. Another is the 20-day moving average is angled lower, a crossover with this 50-day moving average is a bearish signal. So there are some signs of a potential sell-off here in the unleaded gasoline market. So I want to get this on your radar for a potential trade, whether it's the 1, 2, 3 top formation or a break of this pivot point low. If that does set up, I'll send out a trade recommendation to get short with the trading plan details, the stop loss and target. Because our Bob is a volatile market, we're going to want to use stop losses or maybe look to the options market with puts or a put spread to trade this opportunity. So I mentioned the Australian dollar trade recommendation will be going out later today. This is what it looks like. This is a similar one. This was a Euro FX trade, and there's the timestamp to show you when the trade came out. Right above the trade, any information that is pertinent to the trade setup, like margin requirements, stop loss and targets, the risk reward parameters of each trade, and a chart that you can click to enlarge. You have to be on the Trade Spotlight Advisory Service email list to get the trade recommendations. You can do so by going to danielstrading.com, clicking on advisories, and then under technical analysis, you'll find Trade Spotlight. Click the orange button to subscribe. You can read more about it. I provide a free 90-day trial offer. That's more than enough time to see what I'm doing. Otherwise, it's a free service that I provide to my clients and clients of the firm. Here's all my contact information. If you have any questions on the 2 charts that I discussed today or the trade recommendation going out later today. Thanks for taking the time to watch and listen, and happy trading.